Hi, welcome to another edition of Lipper's Fund Flows Insight. My name is Tom Roseen. Thanks for joining us this week. This is for data is going to be for the week ended April 18th, 2012. We actually saw investors shrug off some discouraging news. We heard a couple things. First of all, we saw that market volatility was on the rise. We've seen really big swings, both plus and minus during the week. And then we also heard some discouraging news on the global debt issue. Spanish borrowing costs were going to rise. And then last, we saw jobless claims actually jump. And so even though we heard those type of things, investors were still net purchasers of equity and fixed income assets. Now, when I say that though, the total overall was actually a net redemption. So investors were net redeemers for the week. We certainly expected that coming into the tax period, and to the tune of about $2.6 billion. We'll show you how we got there looking at the macro groups. If we take a look, equity funds actually saw about $500 million in net new money come into their coffers. We saw a good week for taxable bond funds, taking about $4.8 billion. Muni bond funds saw just a little under $200 million in net new money. And of course, the pariah of the group, money market funds, seeing about $8 billion in outflows for the week. And of course, we expected that, being that it's tax time. We'll talk a little bit more about that later on. So when we're taking a focus on this, let's take a look at equities and see what equity funds did, because we really had a tale of two cities here. We saw for the first week in three, we had positive returns, about 1.23% return, about $500 million in net new money come in there. However, here's the tale of two cities. Domestic equity funds saw about $2.1 billion in net outflows. Non-domestic equity funds saw $2.6 billion of inflows. And where we saw the money going into, ironically, was global equity funds, took in about $2.5 billion. Equity income funds, which has been a trend, about $598 million, and then we saw large cap funds actually lose money, about $2.1 billion. That's certainly been a story we've been telling for quite some time. But here's another difference we wanted to point out. If we take a look at ETFs actually saw about $700 million in outflows for the week, which has been kind of the opposite of what's been happening. Institutional investors or ETF is actually going contrarian to what the retail investor has been doing. Here, though, we saw one fund, QQQ, take about $1.1 billion net redemption, and that was probably the lion's share. On the flip side, though, we saw on the ETFs, actually energy funds taking about $511, and the precious metal funds taking about $358 million in net new money. Well, let's take a look at what happened on the fixed income side. Investors remained cautious and have been padding the coffers. This is the 18th consecutive week that we've actually seen net new money come into this group, $4.8 billion. It's the first in three that we saw plus side returns, about 0.38% as far as the return goes. But really where the money went is where we've been seeing it. People are risk-seeking in sorts, and they went after flexible portfolio money, $2.3 billion net new funds coming into that group, and we saw corporate investment-grade debt funds taking about $1 billion. So certainly investors are remaining conservative, but at the same time, being conservative and then seeking yield has been their way of going after a little bit more risk. We have a little concern here. Again, if we see interest rates rise, this could get to be ugly after a while. But right now, it seems like it's a win-win situation. They're actually getting yield, and we have been seeing a little bit of capital appreciation. Well, let's go to another place where we've seen a win-win. Muni bond funds. Muni bond funds actually had, for the fourth consecutive week, positive returns, 0.14% return, just a little bit, but it was the 19th in 20 weeks that we have seen inflows. This time it was about $169 million in net new money. And high yield funds took in the lion's share. We saw about $100 million from national munis, but really the high yield munis took in the lion's share of the money. And of course, this is on two things. They had capital appreciation. We've seen again the fourth week the positive returns, but we've also been seeing a yield that is comparable to their taxable brethren. And then if you take the tax consideration, it's even more of a big bang for their buck. Well, that brings us to money market funds. And money market funds, obviously we expected outflows. This is the 8th consecutive week that we've seen outflows. This time was the tune of about $8 billion. We saw taxable money market funds lose about 4.4. Of that, institutional made up $1.1 billion, and then $3.3 billion was basically made up of the retail sector. So here, people paying taxes, corporates paying taxes on the March 15th. April 15th was for the retail investor. So again, $3.3 billion from the retail certainly is not a surprise to us. And then if we take a look, tax-exempt money markets saw about $3.6 billion in outflows. That's actually pretty big for them as well. Well, we're actually looking forward to what's coming up, because we got a hold of our brethren over at Thomson Reuters, the proprietary research group, and they have been reporting on how the earnings season has gone for Q1. And we're actually seeing, of the 66 S&P S&P 500 constituents that have reported so far, 80% of them have beat expectations. So the weeks coming ahead are going to be kind of exciting. Granted, this is on lower expectations, but if we keep up this great dynamo of earnings reports, stay in the 70s and 80%, I think we're going to see a little market rebound in that. So right now it could be a breather. We won't know until the next weeks come on. So if you want to learn more about the areas that you want to do research on, you can go to lipperusfundflows.com. There you can go ahead and do a deeper dive. If not, you can join us next week when one of the analysts from Lipper will talk about the flows at the current time. Well, thank you for joining us. My name is Tom Roseen, wishing you the best in your wealth planning and creation.